Nifty fell for the second day in a row, but this time it barely moved 3 points. Volatility slipped further. IT stocks quietly took charge, and the index spent almost the entire day inside a tight range. When the market refuses to fall, refuses to rally, and volatility keeps cooling, something important is building beneath the surface. Let's decode what today's session is really telling us. Welcome back to Wealth Maama. This is your detailed post-market Nifty analysis where we go beyond headlines and closing numbers and understand the real market structure, sector rotation, and smart money behavior using pure data and logic. Starting with the market recap, Nifty 50 closed at 25,815.55, marginally down by just 3 points or 0.01%. The index opened lower at 25,764.70, slipped to an intraday low of 25,726.30, but gradually recovered through the session to test a high of 25,902.35 before settling near the middle of the range. Despite the flat close, trading activity remained healthy. Total volume stood at around 1,975 lakh shares, with a traded value of approximately 20,045 crore rupees. Market breadth remained slightly negative, with 24 stocks advancing and 25 stocks declining, clearly showing that today was not a trending index day but a stock-specific and sector rotational session. Why market moved today? From a global standpoint, there were no fresh triggers pushing markets aggressively in either direction. Global cues remained stable but cautious, keeping risk appetite muted. This lack of urgency was reflected in the narrow range seen in Indian markets. Domestically, the key factor continues to be fatigue near the 25,900 to 26,000 zone. Buyers are defending declines, but sellers are also active near resistance. This balance resulted in a classic consolidation day. On a stock-specific level, strength in IT stocks and selective buying in healthcare and aviation names helped Nifty recover from its morning low. However, weakness in FMCG, metals, and defensive heavyweights prevented the index from sustaining above 25,900. The net result was a sideways session dominated by rotation rather than direction. Sector-wise performance. Sector performance today clearly highlighted rotation. The IT sector led the market, with broad-based buying across large caps as traders positioned defensively amid low volatility and stable global cues. Healthcare stocks saw selective recovery, while aviation stocks outperformed sharply on stock-specific momentum. On the downside, pharma stocks weakened, led by Sun Pharma, while FMCG and consumption names continued to face valuation-based selling pressure. PSU utilities and metals also saw mild profit booking, keeping the index capped. Starting with the gainers, Indigo closed at 5,125 rupees, up 2.9%. The stock saw strong buying interest supported by healthy volumes, indicating renewed confidence in aviation demand and operational stability. The move also suggests positional accumulation rather than just intraday speculation. TCS ended at 3,281 rupees, gaining 1.97% as IT stocks attracted defensive buying. With global cues stable and the rupee relatively steady, large IT names were seen as safe allocation plays, especially during a low volatility environment. Max Healthcare closed at 1,048 rupees, up 1.64%, recovering after recent selling pressure. Today's bounce indicates that the previous decline was more profit booking than a change in the fundamental view on the stock. Tech Mahindra gained 1.62% to close at 1,605 rupees, supported by broad-based buying across the IT pack. The stock benefited from sectoral momentum rather than any isolated trigger. Infosys closed at 1,627 rupees, up 1.57%, confirming that IT leadership was not limited to one stock but spread across the sector, reinforcing the defensive rotation theme. On the losing side, Sun Pharma dropped 2.62% to 1,746 rupees, emerging as the biggest drag on the index. The fall reflects sector-wide weakness in pharma stocks, driven by profit booking and lack of fresh positive triggers. Tata Steel slipped 1.4% to 167 rupees and 95 paise, as metal stocks saw mild selling after recent gains. Weak global cues for commodities also added pressure on the sector. Power Grid closed at 257 rupees and 90 paise, down 1.23%, with PSU utility stocks continuing to underperform due to low growth visibility and rotational outflows. Asian Paints declined nearly 1% to 2,758 rupees, extending the weakness in FMCG stocks. High valuations and muted near-term demand expectations are keeping buyers cautious in consumption names. Tata Consumer Products fell 0.92% to 1,169 rupees, as selling pressure persisted across the FMCG basket, further reinforcing the shift away from defensives within consumption. Now coming to volatility, which is giving us one of the clearest signals right now. India VIX closed at 9.71, down 1.32% for the day. This is an extremely low volatility environment and clearly indicates that the market is not expecting a sharp move immediately. When Nifty stays flat and VIX continues to fall, it usually signals compression before expansion. In simple words, the market is storing energy for a future directional move. Support and resistance for next session. From a technical perspective, immediate support for Nifty is placed near 25,730, which also acted as today's intraday base. A stronger support lies at 25,640, and a breakdown below this zone could invite deeper consolidation. On the upside, 25,900 remains the first major resistance. Only a decisive close above this level can open the path towards 26,000 and beyond. Until then, rallies are likely to face selling pressure. For tomorrow, as long as Nifty holds above 25,730, the market is likely to remain sideways with stock-specific action dominating. Strength may continue in IT stocks if global cues remain stable. A sustained breakout above 25,900 could lead to short covering and fresh upside momentum, while a breakdown below 25,640 may result in slow and controlled downside rather than panic selling. To conclude, today's session was not dull, it was disciplined. Low volatility, narrow range, and sector rotation all suggest that the market is preparing for its next phase rather than losing strength. If you value calm, logical, data-driven market analysis instead of noise and predictions, stay connected with Wealth Maama. Also make sure to explore the daily Nifty analysis playlist on the channel, where we decode every trading day step by step. We'll be back tomorrow with another detailed breakdown. Until then, trade smart, manage risk, and respect the process.